Every business, whether large or small, needs to understand the economic context. And my goodness, what a complicated context it is at the minute. But we need to understand what we're operating in at the minute. The economic aftermath, I suppose, of Brexit and COVID-19 will be with us for some time. And for an insight then into how the local economy is recovering, how businesses are adapting to Brexit and the economic legacy of COVID-19, we're really pleased to have somebody to make sense of it all for us. We're going to hear now from Richard Ramsey, Chief Economist of Ulster Bank. Richard, I am glad that I'm going to find out now everything that's going on, and you're going to give a presentation for us this morning, and then we're going to take some questions for you. So we are opening up the chat function from now. Any questions you have for Richard, we'll put them to him at the end of the presentation. But for now, over to you, Richard.
Okay, thank you, Sarah, and Minister, distinguished guests and attendees. Good morning. I'm delighted to be part of this Newry Chamber of Commerce conference, albeit by Zoom. And as Sarah said, I'm looking at the economy after Brexit and COVID, but as was highlighted, it clearly isn't, these are still a work in progress. And what I'm going to look at is where the economy is now. Recovery is clearly in progress, albeit some parts of the economy have recovered faster than others. And whether you're an optimist or a pessimist, there is clearly something for everybody in this presentation. What I'll also highlight is some of the key challenges facing the economy, not least inflation, the fact that the government stimulus packages won't last forever. There's, of course, Brexit, global supply chain disruption. All of those things will impact on businesses, not just in worldwide, but in Northern Ireland too. So if we go on to the next slide, please. And first of all, just sort of like cast your minds back to 2020, either a year to remember, a year to forget. What we saw, both from a health and economic perspective, what we actually saw last year for the UK economy, it shrank by almost 10%, which was its deepest downturn in almost 300 years. For Northern Ireland, it's estimated to have fallen by about 11%, which is its deepest contraction in a century. What we saw was that economic activity was deliberately switched off, and that through lockdowns, and that's why we saw the extreme events that we saw. But some of the events and numbers that economists saw were things that we would never have imagined that we would ever see. We saw things such as hotel occupancy rates for several months last year were at 0%. We saw the likes of new car sales in April last year fell by 99% year on year. And what we also saw was some strange things about this recession, which we don't normally associate with recessions. We saw house prices continue to rise. We saw corporate and personal insolvencies continue to fall and hit new lows. And we saw the likes of unemployment hardly rose at all. And for Northern Ireland, it remained below 4% through the entire pandemic. So if we go on to the next slide, we'll just sort of show where exactly the economy is. The latest figures, the chart on the left is looking at Northern Ireland's composite economic index, looking at private sector output. This is the nearest thing that we have to GDP, and you've gotten the right UK monthly GDP. So this is looking at levels. And what you can see is we saw these extreme falls in private sector activity. But it's interesting to note our recession didn't begin when the pandemic hit. The economy was already contracting. You can see the output falling from the second quarter of 2019. But it was the huge fall in the second quarter when we had the full lockdowns, where we saw private sector output fell by almost 18% quarter on quarter. And to just put that in perspective, that's what we saw in that one quarter compared with a fall of just over 13% over 6 years in the last global financial crisis, in the last recession that Northern Ireland had. But what we had was, that was a record decline, but what we had again with the strange recession that this was a record rate of expansion. So in Q3, lockdown, easing restrictions, we saw a significant rebound, increase of over 20%, a record expansion, and that was almost all of the decline in the second quarter was recovered. But what we have now seen with more lockdowns, we've seen a further fall back in Q4. We have some data for services activity and industrial production for Q1 of this year. That showed a further decline. Remember, lockdowns were in place as well. So, but as you can see there, as of Q4, the economy, private sector output was about 3.7% below where the pre-pandemic level was of Q4 2019. If we've fallen another 2%, it's going to be even further away from that. But closing that gap and getting back to the pre-pandemic levels is what the game's all about, and that's probably going to take a couple of years from where we're at now. You can see the chart on the right is just looking at monthly as opposed to quarterly GDP. Again, a similar sort of trajectory for the UK, but what you may notice just in terms of March and April, the recovery is starting to gather pace, and that's what we expect to see in Northern Ireland too. So next slide, please. While private sector output is still below pre-pandemic levels of the fourth quarter of 2019, it's not the same for all sectors. Some sectors have done well, and other sectors have fared very badly indeed. This chart is looking at output, and it compares the latest figures that we've got for Q1 2021 relative to pre-pandemic levels of Q4 2019. And you can see there are some COVID winners, such as pharmaceutical sector, where it's actually not just recovered the output, but output is significantly higher than it was before the pandemic hit. And indeed, the likes of the pharmaceutical sector, think of Brandox, Norbrook, Almac, etc., they have actually hit record levels of output during the last year. Also, we heard about mentions of the likes of block blinds. We've seen textiles, rubber and plastics. They've done really well, and they've been businesses within these sectors have been linked to the PPE and a lot of the protective equipment that has gone with the pandemic. But if we look at the other end of the spectrum, bottom of the table, we see those areas which have suffered most. Those are the areas which were most exposed to people, and therefore social distancing restrictions hampered them the most. You can see the hospitality sector is still down 9%. Other services, which is everything from hairdressing, dentists, beauty treatment, to arts, leisure and recreation, it's down almost a third. But look at transport equipment, that's down half. It's producing half what it did before the pandemic, and that's being dragged down by aerospace. So if we go on to the next slide. So the idea of the recovery is we have to think of this idea of a K-shaped recovery. We heard talk about whether the shape of it was going to be a V, an L, or a U, but effectively it's been a K, where some sectors have recovered or actually been not affected at all, whereas others, the sort of downward leg of the K, have struggled significantly. And you can see that whether it's some IT firms doubling profits during the pandemic, similar strong growth by some of our flagship pharmaceutical firms. Yet when we look at the tourism sector, some of our top hotel groups posting big losses of almost 17 million over the last year. And then we've got the likes of aerospace. We've seen a steady stream of job losses on that front. So it highlights that it's not just a one hat fits all kind of recovery. It's different for different people depending on what sector you're in. Next, please. And that trend in output is also being sort of played out in employment too. You can see at the top end, this is looking at Q1 2021 year-on-year growth in the number of employee jobs. So it doesn't include self-employed. You see information and communications, sort of IT sector, increasing levels by 9%. We've public sector has performed strongly as well. And indeed, in the first quarter of 2021, the number of public sector jobs has hit a 7.5-year high. Remember, we're recovering from sort of austerity and job cuts there. But then if you look at the other bottom end of the table, you see the areas which have seen big falls are the likes of the hospitality sector, over 9%, arts, entertainment, recreation, 8%, and some of the other sectors there as well. You have to remember that this, particularly for the hospitality sector and retail and the arts, entertainment, recreation, remember there's a significant number of jobs as of Q1 of this year. At the end of March, there were 100,000 people on furlough as well. So these are the job losses, not including furlough, and that's going to be a challenge moving on. So next slide. So fortunately, we've had the sort of the declines in Q1, but Q2 is certainly looking much better. This is looking at global output. This is a global PMI from Market Economics. The line here to look at, the horizontal line, is 50. Anything above that is growth. The higher the number, the faster the rate of growth. The lower the number, the faster the rate of decline. And you can see what we've seen in April and May at a global level. We've seen global output using this, which is the most timely indicator that we have with economic indicators, hit a 15-year high. We've seen that. It's been driven by the US and also the European economies, including the UK as well. But one of the problems that they do highlight is that there is still capacity and price pressures, inflationary pressures, which are a concern. So if we go to the next slide, please. So, and that is the big concern, as you see in this on this cartoon, is the US economy was poised for Joe Biden with his big stimulus package to light the fuse, to set the economy off in a big takeoff. But then we've got inflation coming in, and that could spoil the party. And that is a key theme and a key concern around the world at present. Next slide, please. Just returning closer to home in terms of these PMI indices of private sector activity. This is looking at Northern Ireland, UK, and Republic of Ireland. We've seen, if you look at Northern Ireland, the red line, we've actually seen a rebound, and we recorded growth in April and a further acceleration in May. And indeed, that was the joint fastest rate of private sector growth in May in almost 7 years. What the Republic of Ireland and the UK recorded, they recorded their fastest rates of growth on record in May. And indeed, we've had figures just out yesterday for the UK for June, and pace of activity is eased slightly, but it's still very, very strong. Within Northern Ireland, all sectors of the economy are growing. The strongest performers are retail and manufacturing, but we're still seeing services and construction. We're recording growth during the month of May. And if we think to some of the economic growth, what's projected for the UK economy this year, UK economy is expected to grow by over 7%, 7.2%, which, if that materializes, that would be the fastest rate of growth since 1941. The Republic of Ireland is estimated from ESRI this morning to grow by 11%, and the Northern Ireland economy is probably going to grow something by about 6% and potentially even higher than that. But you have to remember that these big growth rates aren't so much explain how wonderful things are this year. It's largely a reflection of how bad things were last year. The lower things were and the worse things were last year, the easier it is to get a higher rate of growth this year. So next slide, please. And what we're seeing is, in terms of the labour market, the chart on the left is just looking at the unemployment rate. Northern Ireland's the red line, and you can see it's still, even coming into 2021, the unemployment rate still surprisingly low, just 3.1%, and it hasn't been above 4% during the pandemic. Compare that with what happened in the last recession, when we were up around the 8, you peaked at over 8%. This is, once the furlough scheme ends, this is expected to go up. But while initially, sort of during the course of this year and last year, the consensus was that it's going to go over 10%. It's probably only going to hit about 6% and maybe even less for Northern Ireland. For the UK, probably around about 5.5%. Chart on the right is looking at the claimant count, which is the dole queue, for want of a better sort of phrase. And this includes job seekers allowance and also some universal claimants, universal credit claimants who are claiming primarily due to unemployment sort of related issues. But you can see over the last 6 months, this peaked last May, and you can see the spike where it almost doubled in the space of a month. But it has been falling, and that is clearly good news, down 15% from the peak so far. So next slide, please. When we turn to employment, the jobs recovery has been accelerating and moving up a gear in the second quarter. The best indicator of employment is the HMRC payrolls data. It's the chart on the left. You can see that in February, before the pandemic, there were 751,000 employees on this, on payrolls, local payrolls, fell by about 16,000, but it has then since recovered, particularly within April and May. So that's the second quarter is really accelerating. So 2/3 of the jobs lost have been recovered, with 3/4 of that occurring within the last 2 months. Just for context, if we think of the last recession, there was almost 42,000 jobs lost, whereas what we're looking at here is just 16,000. But you have to bear in mind, this does not include self-employed. The self-employed have actually, number of self-employed has actually fallen to a 90-year low and fallen by 26%. A lot of the self-employed have actually moved on to payrolls, and so part of this growth here is actually people moving from self-employed to being employees. Also, a lot of the growth that we have seen to date, up until the first quarter at least, was public sector as opposed to private sector. But if we look at the chart on the right, which is the PMI, which is showing that the private sector firms in Northern Ireland in May were recording their fastest rise in staffing levels or hiring that they have at any time in the survey, which actually is not shown there, but goes back 19 years. So really strong performance there. But if we go on to the next slide. But what we are seeing as a key theme has been skills shortages have been intensifying. We've seen an exodus of EU nationals from the UK. This is causing a lot of issues and skills shortages in everything from construction to manufacturing, and particularly in the food sector as well. And indeed, we have, over the last day or two, we have had the Road Haulage Association talking about that there's an estimated 70 to 100,000 shortage of drivers. And clearly this is going to cause problems for the haulage industry, for transporting our food and logistics, and that will potentially lead to wage increases, inflationary pressures, etc. Next slide, please. So when we come to recovery, when we think of new car sales, last year new car sales fell overall by 30% year on year. That was the biggest fall on record, and that was over 15,000 fewer new cars sold last year. This chart is looking at just the period January to May, so the first 5 months of this year. And what we have seen, and this is why you need to sort of take with a pinch of salt whenever you're hearing about these mega growth rates. For example, last April, there were only 24 new cars sold in Northern Ireland. That was a fall of 99% from the previous year. Then we've seen a rebound of almost 14,000% this year, this April. And it's been similar in May, where there's been an increase of 2,600%. But these are big increases off very low levels. If you actually look at January to May as a whole, yes, you can see there's almost 17,000 new cars sold. That's up on last year's, the corresponding period, up 40%. But how does it compare to pre-pandemic levels? Not very well. You can see it's well down on 2019 and well down on the COVID average, pre-COVID average of 27,000. What this has implications for as well is part of this is due to an inability of car dealers to actually get cars, new cars, because there's been supply chain disruption, lack of semiconductors which go into cars. All these kind of shortages are coming in, and that is having an impact here. That has knock-on effects for the likes of the second-hand car market as well, where if any of you are trying to get second-hand cars, you'll maybe find that it's increasingly difficult, and plus we've seen huge price rises as well. Next slide. But if we turn to the property market, there's been a really strong rebound in the property market. The chart on the left is looking at residential property transactions, and it's a 12-month average. And what we did see last year was some record monthly lows in residential property transactions due to the lockdown. But what we have seen, particularly since the autumn, is a lot of pent-up demand and new demand, particularly from GB and the whole working from home and the ability to avail of cheaper property prices in Northern Ireland relative to the likes of London and the Southeast. We've seen an influx of people coming back in. What you have seen is a really strong rebound. So since the autumn, you've seen the best months, whether it's November, December, January to May, the best months that have for sales since 2007, and which is good news. The issue is this likely to continue? The answer is probably not, because this is a reflection of demand, but we're running up against supply constraints, not least from lack of stock coming on, and also in terms of new build. The rate of house building started to recover in the first quarter of this year, but if you remember last year, there was 1,000 fewer new houses coming onto the market, and supply chain disruption in the construction industry, which I'll touch on later, is going to be a significant headwind for recovery there. So if you've got supply restricted, demand still really strong, prices, which were up 6% year on year in the first quarter, are going only one way, and you're probably going to see prices in Northern Ireland end the year about 10% higher than the corresponding period last year. What we're seeing on the right-hand side is the commercial and industrial property transactions, or non-residential. They have seen a recovery, not quite as dramatic as what's in the residential sector, because if you actually look at over the last 12 months to May, sales are still down slightly, down about 3% versus the kind of pre-pandemic period. Big challenge for commercial and industrial, or for commercial sector, and particularly offices, is going to be dealing with the working from home and how that's hit demand for office accommodation in our town and city centres. Next slide, please. But if you think of, yes, there is a recovery in trade, but you have to remember that this is based on employment, or this is based on support, government support being on full blast. This was a cartoon which occurred just at the time of the budget in March. Yes, we're still in the process of spraying money at businesses and people, but later that is going to change, and we know that things, particularly the furlough scheme, it's going to be tapered off from next month. Tax cuts, temporary tax cuts such as VAT reduction for hospitality, it's going to be unwound later, and all things like business rates, holidays, relief, stuff like that. And looking beyond sort of like the immediate recovery period, you're going to see tax rises. The budget was actually the biggest tax rising budget, which is projected for the next few years since 1993. But as the minister said, there are going to be some stimulus coming in the next few weeks and months in terms of the shopping voucher scheme and the holiday at home as well. Next slide. But the big theme of this year has been inflation, year of rising prices pretty much everywhere you look, and you'll have seen that in forecourts and petrol pumps, etc. What I'm looking at in the chart on the left is looking at the oil price of a barrel of oil in pound sterling, not in terms of dollars. And what you can see is the huge recovery. There's been a 244% increase from last April's low. But whenever you hear of these strong rebounds, remember this time last year, we had experienced massive cuts in oil price, petrol prices, also gas and electricity, which is linked to that. So what we're seeing is almost a return to kind of normal levels. So even though we've seen this whopping big increase, if you cast your eye across, it's only taken it back to where it was maybe a couple of years ago. And it's a similar story with the likes of petrol and diesel prices, where you can see the sharp recovery that we've seen, but you cast your eye across, it's only taken it back to where we were maybe 2 or 3 years ago. Next slide, please. But what we are seeing is these inflationary pressures are hitting local business. This is again the PMI surveys for Northern Ireland only. If you look at input cost inflation, you can see how sharp that is rising. It's hitting a record high, and particularly within construction sector and manufacturing are seeing the highest rates of inflationary pressure. That's for May. June is going to be worse, and in many ways we're hearing sort of cost rises for construction input costs like materials, building materials rising almost by the day. And what that has led to is that businesses are now passing these costs on, whether it's labor costs or transport costs or fuel costs. They're passing these on to their customers, and you can see the output price index again. It hit a record high, so that is why us as consumers are going to expect to see further price rises going forward. Next slide, please. And this is looking at just year-on-year UK inflation. CPI is the blue dash line, and you can see that it recently, as of May, just crossed the MPC's target of 2% to 2.1%. Now, there's talk of a lot of the inflationary pressures that we're seeing, because we've seen the likes of food prices globally have been rising at the fastest rate in a decade. We've seen a lot of commodity prices, be it steel and building materials, rising very rapidly as well, that they're going to start to feed through. This inflation rate is probably going to, it's going to go above 3%. And the question is, some people are saying, is it going to go to 4 or 5? If you actually look at that CPIY, which is looking at inflation, excluding indirect tax cuts, and remember, we've got temporary reductions in VAT, which are keeping the inflation rate down. They're going to drop off in a phased way in September next March. So you're going to see later this year, inflation is going to jump. The key question is this jump going to be temporary or is it going to be more permanent? Next slide, please. But kind of linked to one of the sources of inflation is this whole issue of supply chain disruption, whether it's flakes for ice creams, which there was a shortage of those, whether it's any of you are into cycling, where the likes of Shimano, some of its supply parts, there's a waiting time of 400 days. Supply chain disruption has been a feature around the world. There's a global shortage of bikes. There's even there's a shortage, particularly in the US, of chicken wings. And there's also, in terms of tinned tomatoes, start hoarding these now, because they're actually, in Italy, tomatoes are being left to rot because they cannot get the tin cans to put them in, because the Chinese have got all of those. So there's supply chain disruptions around the world. That means delivery times are not what they used to be. That's going to be difficult to work as a business. And what you see here is, in a recent Tunes Manufacturing NI survey of manufacturing firms, the biggest obstacle for the pace of their recovery that they cited was supply chain disruption. In the Construction Employers Federation, they talked about that. About 80% were experiencing disruption from Brexit or global disruption. Back 80% back in December, and that's likely going to be even higher. So clearly the fact that the economy was turned off and on last year, and while items of expenditure such as spending on holidays, hospitality, all of these sort of things weren't possible, people then started flooding to online sales, buying goods, and that has led to a big surge in demand, and the global supply chains basically can't cope with it. So whether it's the likes of dumbbells, garden furniture, you'll all have seen what has been going on, and the very lengthy delivery times with that. Next slide. And one of the big disruptions has been, of course, Brexit, new Brexit paperwork. The protocol has been more bureaucracy and red tape. This is a slide just from Tunes Manufacturing and Manufacturing NI survey of business. What to look at here is, this is manufacturing. People were asked, how have your suppliers reacted to the protocol arrangements? And while the red is GB, blue is the EU, and if we just look at the red ones, there was, while a quarter of firms said there was no significant impact, it was business as usual. Look at 50% of manufacturers here in Northern Ireland said that their GB suppliers were unprepared. And more worrying of all is 20%, 1 in 5, said they were unwilling to engage with the new requirements. Clearly, that is going to be a spanner in the works as far as the recovery is concerned, if we've got supply chains there. Next slide. And this question was looking at then also, how confident are you for next year? 38% said they still expected the disruption to persist. Encouragingly, there are opportunities. If you look at the positives, there's 9% say that there's currently an opportunity, given Northern Ireland's status as being part of the UK single market and the EU. There's an opportunity for the business now, with a further 16% talking about opportunities in the medium to longer term. If we go to the next slide, we'll see what has been happening to some of these opportunities. And this is looking at the Republic of Ireland's trade data for January to April 2021 relative to January to April 2019, because there was a lot of disruption last year because of COVID and also stockpiling. So if you actually look at what's been happening to trade, you can see that it's actually led to this border down the Irish Sea has actually diverted trade more in the north-south axis. You can see that GB exports to the Republic of Ireland have fallen by 40% over this period, whereas sales from the Republic of Ireland to GB have fallen by 9%. But look at what's been happening north-south. An increase of goods in terms of value expressed in euros of 151% going north-south, and the Republic of Ireland saw an increase of a third of sales going the opposite way. So clearly, this is what's going to happen. Basically, trade is like water finding a level. If there's a disruption or barrier or an obstacle, trade will work around that to go around those obstacles. And what we've seen with the protocol is it has made it more difficult for trade for GB suppliers and also Northern Ireland. But there are opportunities here. And next slide. So just sort of to conclude, we do expect to see strong growth in the second half of this year, but remember, support measures are going to start to be withdrawn, so it's going to be more difficult. This is the easiest part of the recovery, actually, when you open everything up and the support measures are still on. So whenever they're withdrawn, you'll expect to see the likes of unemployment to rise, insolvencies, which have been at record lows, are going to start rising as well. There's still more Brexit red tape to be rolled out. Not all of the grace periods have expired. There's still more coming up in October and at the end of the year. Global supply chain disruptions likely to continue, but the key question is for how long? Similarly with inflation, how high is it going to go and how temporary will it be? And in the meantime, I think when we talk about V-shaped recovery, the real V that we're thinking of is viability, and it's a whole pressure of cash flow at the minute for many businesses trying to recover from the last 18 months or so. And if we think of one of the biggest challenges is going to be actually the legacy of COVID in terms of health, what that's done to mental health with children, eating disorders, etc., waiting lists, also in terms of education, lost education. And the key thing is going to be how does the working from home change our landscape in the high streets, town centres? Are people going to go back to the office? They're certainly not going to go back to the degree that they were before the pandemic. How is that going to affect commercial property prices? And of course, we've also got things like the whole legacy of debt. This debt is going to have to be paid, whether it's for businesses or also when they look at the whole public sector debt, and whether we're going to see higher taxes further down the line. That's where we are now. And then just finally to conclude with, once we get rid of COVID, remember this is just the preliminary round where we've still got climate change is going to be the big issue for businesses. It's a big issue, but it's also an area of big opportunity. Thank you for your time.
Richard, thank you for your time putting together a very comprehensive overview of where we're at. Still challenges ahead. We have a couple of minutes in hand, folks. If anybody would like to put a question to Richard, this is the time to do it. You can use the chat function there, and we will pick up those questions. Richard, you talked there a little bit about the changing the transition, I suppose, back into the workplace and things like that. You talked about the impact that might have on commercial property prices. But if we even just look at house prices at the minute, and, you know, with those support measures ending maybe in the autumn, I know the Chancellor is under pressure to keep them going for a while longer. What impact do you think reduction in support, withdrawal of furlough, etc., people coming off furlough, what impact will that have on the housing market?
I think normally you would expect it to be a negative for the housing market, but what we are seeing is we've just got a mismatched demand and supply, and those people who are looking to move house, they're in relatively secure jobs. So where we've seen the people who have lost jobs has been in sort of particularly the younger people, younger generation. So particularly the people in their early 20s. So they weren't going to be looking to buy a house in any case. So normally it would be a negative, but what we have seen is this whole new dynamic. People have changed their view on housing and what they actually need. People who weren't going to move house before the pandemic have moved or were planning to move. We've seen a surge in detached property sales. So it's been this whole kind of race for space, as opposed to, you know, whether it's for a home office, whether it's for bigger gardens, whether it's rural areas as well. So we've seen that whole dynamic, and also a big feature, particularly in some of the most expensive postcodes around Northern Ireland, has been the influx of people from GB, where we've now opened up this whole supply, new demand of people who are wanting to return home and avail, check out of their kind of £1 million 2-bed apartment in London for a 5-bed mansion in the likes of Helens Bay or Kiltraw or somewhere like that. That is happening, and it just shows how this is going to be a big change to how people consider when they're actually looking for a job. Normally, you were thinking of you lived in the geographical locality of where you work. That's all changed now. As long as you've broadband access, you're increasingly going to see people in Northern Ireland working elsewhere but living here.
And then don't bring up the broadband issues, which are still a problem in so many parts in Northern Ireland. Seamus McGivern has a question on the chat for you, Richard. Why is Northern Ireland performing slower than the UK and ROI?
Well, one of the reasons is just in terms of the restrictions, where the restrictions were lifted, not for the Republic of Ireland, but for the UK, the restrictions were lifted earlier in the UK as opposed to Northern Ireland. I would expect to see that PMI, Private Sector Activity Index, we could see a record high coming for the month of June, which will be in the next couple of weeks. So there's a bit of sort of catch up there. So that is one of the kind of like main reasons.
What about interest rates? All eyes on the Bank of England. Is it today there's supposed to be some kind of announcement? Are they? I mean, we've been looking to see, is this going to happen? What do you think?
In terms of interest rates, we're record low, just 0.1%. Probably what people were thinking was that it's going to be 2023 before we're going to see rate increases, because inflation is so low and the recovery is going to take a while. The recovery has been stronger than we've expected. Inflation has been higher than we've expected. So I think we're now, the prospect of interest rate rises are maybe looking like an option next year, certainly not this year. What will be interesting to see is just how the Monetary Policy Committee, there'll be no change on their policy settings, but it's what they talk about inflation. Yeah. How transitory is it? How concerned are they about it? Because the view is it'll go up and then it'll come back down to 2% within the next year. If it doesn't, there will be problems.
And what do you think the impact will be for small businesses there? I mean, you talked about inflationary pressures, especially around raw materials. What are your concerns there?
Well, I suppose it's just particularly there's such a shortage of raw in terms of like building materials at the minute, because what we've seen is the boom in the US housing boom and the US economy and all the stimulus that it's getting. That the impact of that is they're consuming a lot of the, like say, all the timber coming out of Canada. that has, and other building materials, that has ripple effects around the world, including in terms of Northern Ireland businesses. That makes it extremely different if you're in the construction industry to actually price when prices are going up almost by the day on terms of building materials. It's the worst time in the world to be building a new home at the minute in terms of the uncertainty and the cost. And if you're a business and you are trying to do contracts and even public sector procurement, even if they were on fixed price contracts, a lot of those are going to have to be reopened because the scale of the price rises is going to mean they're not deliverable, not just in cost, but also in terms of timescales as well, if we can't get the materials. So that's going to be one of the big things. And whether with inflationary pressures, the big issue which people would be concerned about on businesses, does that lead to people then wanting bigger pay rises because the cost of living is going up, whereas they're trying to say it's temporary, just let this go. But wage pressures due to the skill shortages as well.
Well, we have been hearing too, when we look at those sectors that were so badly impacted by the pandemic, you know, the nighttime economy, the restaurants, the pubs, we're hearing now, whether it's anecdotally or what, about these massive charges in bars and restaurants. You know, everybody's discussing the price of a pint or a glass of wine. Is it fair that this is happening for the consumer?
I suppose what you are going to see, it is going to be interesting over the summer because there is going to be this surge in staycation. And in many ways, what we normally do with demand and supply, demand for staycations will be huge, supply will be limited, and normally prices go up to try and, adjust demand to meet the supply. So I suppose the thing is, a lot of people have got used to staying in, and now if they're going out, if they feel that it's too expensive, they'll maybe be then sort of sitting back. So I think businesses maybe need to be careful in the hospitality sector that they don't go in too hard in terms of the price rises, because any of the sort of goodwill that they have, where people are wanting to support them, might dissipate quite quickly.
Okay, yeah, it's a fine balancing act required. Very quickly, two questions that have come in a bit late in the chat, but we'll try and get to them. David Ellison, how important is the £82 million tourism business, even in that, to Newry, Mourne and Down District Council? Can the tourism staycation market boost the local economy, Richard?
Yes, it certainly can. And I think it's not even just good. I think we'll still see the staycation boost next year, because I don't think we're not going to be back to pre-pandemic holidays. Probably next year there'll be some recovery, but it won't be back to normal. So I think the staycation market is an area that, you know, it is going to grow going forward. And whether we end up having like a centre parks in Northern Ireland, as they do in the south, is maybe an opportunity that we might see some people sort of go for that kind of facility.
Yeah, David is also mentioning there that Expedia is charging 5 nights in a B&B for £3,341. This is not helping the tourism business. No, that is called really sticking the arm in there. Declan McConaughey wants to know, on new car sales, are people delaying the purchase of their next new car to consider if it will be petrol, diesel or electric? Comes back to the whole climate issue as well.
Well, there has been a surge in sales of, so that just shows you the kind of K-shaped recovery, where if you look at the electric vehicles, they've been surging. So there's probably an element of people have been delaying to wait and see what happens, but there's also been an issue of people have not been able to actually get the new cars ordered in, and there's many people have maybe reprioritized whether they actually need a second car or dealing with one car. So that's been an issue. And also what we saw was a big slump in rental cars, because they cancelled all their orders last year during the lockdown, and they're now trying to restart that up. So there's probably a variety of reasons there.
Yeah, lots of things to consider. We've run out of time. I know there are questions still coming in, but I don't know, Richard, even if you're able to answer in the chat there. I'm going to have to move on. It's been great having you here this morning, so much. So much, I suppose, to still be a little uncertain about, but definitely some opportunities ahead too. Richard Ramsey there, Chief Economist at the Ulster Bank, on his overview of after Brexit and living, I suppose, in then this transition with the COVID-19 pandemic. A reminder, if you want to use the hashtag today, we'd love you to mention us on social media. Tell people what you're hearing this morning. Tell us where you're tuning in from. Hashtag NISBC 2021.